Let's take a look at some charts on Ethereum from this week's article on Brave New Coin. So similar to BTC, ETH is a proof of work network, at least currently in its current state. They have plans to slowly transition to proof of stake over the next few years, with phase 0 of ETH 2.0 coming potentially in November. And I say potentially because that's the target date currently, but knowing the Ethereum community and development, that usually gets pushed back a couple months, or there's some issues or whatever, which is fine. It's just, it's a soft date. It's not a hard date, but it's important to set realistic expectations when you see a November date, like we saw dates on prior forks that get moved around just because of holidays, end of year, and whatever else. So November is currently the soft date, and that's important if you're a speculator for ETH and you're wondering what's going on and when and why is price doing what it's doing. Where's the hype? Where's the narrative? That sort of thing. So we'll start by talking about what may look boring on the surface, hash rate and difficulty, but tells an insane story if you know what you're looking at, because prior to probably April 2020, the return on investment on ETH mining was completely in the dumpster because inflation has continually declined, which is good if you're a holder, bad if you're a producer, right? So if you are a miner, you want inflation to be as high as possible, ideally, so that way you can make the most money and just dump it on the market, right? Obviously, there's some caveats with that, but you get the point. Recently, over the past few months, the Ethereum network has gotten so busy and full and active and crowded that transaction fees have increased substantially to the point where they have eclipsed mining rewards, block rewards, for example. So block rewards are now smaller than transaction fee payouts for miners. So they are making mega bank now. And the hash rate, unsurprisingly, has continued to increase as that ROI has come back on mining. So if the ROI is there, much like BTC, hash rate should increase. That's just 1 + 1 = 2 basic stuff. Hash rate is increasing so rapidly now that it's almost to an all-time high. Like this looks pretty far away from an all-time high, but if fees are sustained this high, this long, for much longer rather, I expect hash rate to just blow past all-time highs. I also expect some company to release a miner soon because of how profitable it is to both mine and sell the miners at that point. Even though the proof of stake transition is coming and these miners will be bricked in potentially 2 years or less, that almost kind of doesn't matter because fees are so high right now. I mean, look at the profitability on this per day. And these are miners from 2018. This is insane. Absolutely insane. So if you're a miner at scale, you're making mega bank right now. And if ETH USD price appreciation occurs, you're just making hand over fist at this point. With any miner that's 2 years old. It's September now, so 2 years old, you're making this amount of money. It's insane. So I think the gold rush to ETH mining will be temporary, but it's definitely there right now. It's back. And here's that inflation graph again. So inflation is like 4.4%. It's not much lower than it was maybe 2019, but it is lower. The big difference is the fees. The fees are astronomically high right now, and miners are swimming in money. Block counts are basically at an all-time high as well, and pending transactions are essentially sitting at 150K constant ceiling, because over time, if your transaction isn't approved, it just gets kicked out of the mempool or whatever it is the equivalent is on ETH. I'm not sure if they call it a mempool or not, but that's what it would be on BTC. So if your transaction is waiting to be confirmed and it isn't over X amount of time, it just gets removed from the pendings. So that's obviously a problem on the user end. If you send a transaction with a fee that seems fine at the time and then fees keep increasing, your transaction just gets kicked out. It's kind of the state of the Ethereum network right now because it's so clogged with activity and transactions, and scaling in general is just, I'll use the word poor because it doesn't meet the demand currently. But at the end of the day, if any network gets extremely popular, you could argue that the scaling mechanisms are poor. you could argue that the scaling mechanisms are never going to be good enough on anything if this stuff gets super popular, which is possible. That's why we need layer 2, 3, 4, etc. If we look at ETH, which is another big factor in USDT ETH, which is another big factor on the ETH network activity, other than DEXs and yield farming and DeFi right now. These ETH transactions on USDT transactions on ETH, rather, I keep screwing that up. The USDT transactions on ETH have increased by several factors. As fees went up and up and up, those USDT transactions have declined slightly, but they're still like 20% of all transactions on ETH right now. And if we just compare this to Omni USDT, you can see Omni USDT is pretty much done, dead, which is surprising because if it's cheaper to send and quicker to send on another chain other than ETH, which it's getting to the point where it probably is, to send it on Tron or Omni, I'm surprised that these transactions haven't started to increase a little bit. But it's probably the case that because of the interactions with ERC20, USDT on DEXs and whatnot, that Omni transactions won't ever increase again because they're not compatible with DEXs and DeFi and that sort of thing. If we look at a full node for ETH, another like boring thing that nobody really talks about, we're approaching 5.5 terabytes, which is not small for a full node. This is a full node of everything that's ever happened, not a partitioned node of specific stuff that's happened over a specific time period. BTC full node is around 350 gigabytes, ETH 5.5 terabytes. That's going to continue to increase, obviously, with all this DeFi stuff, and will be a long-term scaling issue, centralization issue. As it is, ETH requires a company called Infura to sort of manage the full nodes and general activity on ETH. I don't know how many full nodes are on ETH. I don't think anybody does. It's very difficult to sync a full node on ETH. So just something to consider. Another scaling issue, decentralization issue that isn't an issue until it's a big issue, because if you're trying to make transactions or interactions with the chain and there aren't enough full nodes, the whole thing could just collapse. That's really the risk. Or you have a bad actor with all the full nodes and they could alter transactions, that sort of thing. This isn't FUD. This is just a possibility when you're talking about a lack of robust full nodes on the network that are decentralized. If we're looking at transaction counts and fees, again, fees are the highest they've ever been. Not currently, but in mid-August, they were about the highest they've ever been. They're down significantly from where they were, but they're starting to rise up again with the recent Uniswap governance token being released. Transactions per day took a pretty big hit, likely because of transaction fees. So again, the network will sort of self-correct in that it prices out anybody who can't afford the fees. Supply and demand just makes sense. But if you want your network to continue to grow, you don't want to see fees continue to increase. Obviously, scaling issues, which are known on ETH and in the process of being fixed with potential layer 2 proof of stake, yada yada stuff. That's pretty far down the line, but it's being worked on. If we look at NVT and active addresses also took a pretty decent hit. They're still way above multi-year highs. Never quite reached the all-time high in 2017, 2018, but came very close to that. NVT has continued to decrease over the past few weeks, which is bullish in a vacuum. NVT is an inverse metric of economic utility on a chain. So it's no surprise that NVT is decreasing with network activity where it is. It basically says the market cap should be higher based on network activity of the chain. If we look at two other narratives going on for ETH, it's ICO treasuries eventually going to zero and DeFi lockup on ETH. So if we compare and contrast, we had the ICO boom in 2017, 2018, and that sucked a lot of ETH supply into treasuries. Those treasuries then began slowly selling all the ETH back into the market. Price dropped, unsurprisingly. Now we have the yang to the yin of ETH treasuries being sold off, in that ETH is being locked is a loose term. It's not really locked. It's just moved somewhere where it can't be sold immediately, essentially, unless it's a derivative exchange, whatever. But the point is ETH is being moved in droves onto various liquidity providers, let's say. So it's good to see these treasuries actually go to zero because the supply glut overhang worry isn't there anymore, really. But you can see that, we were at around 5 million ETH. Now we're below 1 million ETH in ICO treasuries, at least that are known ICO treasuries, wallets, for example. And we're at 7 million locked. So the main reason why price, in my opinion, hasn't really increased substantially is because of the inflation since 2018. Hasn't caught up with, the lockups haven't caught up with the inflation yet. So this looks like it should be way more bullish than it is, but when it comes down to it, I think the inflation is really what's holding price back, all that excess supply. If we look at DApps on ETH over the past 30 days based on volume, Uniswap is the mega leader here, and all this stuff is DeFi exchange related stuff, unsurprisingly. Yield farming has become very popular. DEXs have become very popular, largely because of regulatory arbitrage, meaning they are temporarily immune to legal concerns or legal litigation, which I expect to eventually come online here in the next 6 to 12 months. SEC, among other governmental agencies around the world, will start to look at all this stuff and say, is this legal based on our laws? You can think what you will about any of that, but that's why DEXs are exploding. Okay, that's just it. You can list anything you want on this stuff, and nobody can say anything about it. And that's why volume is exploding. Uniswap has also had the most users by a wide margin over the past 30 days. SushiSwap being number 2. If we look at Google Trends for ETH, DeFi, and yield farming, all of which are sort of increasing over the past few months. Obviously, DeFi and yield farming more so over the past few months. But it's good to see Google Trends staying at all-time highs for this stuff because it means continued renewed interest that's measurable for DeFi and yield farming beyond just price action. If we look at technicals for ETH, Bitfinex long shorts at the top, RSI at the bottom, VPVR, yearly pivots, 50, 200 EMA, and volume. So ETH USD longs on Bitfinex are basically at an all-time high, have stayed at an all-time high since April. These are important to watch as price continues to increase, because if price continues to increase and these longs decrease, that's usually a good sign that price is done at that point, because the whale in the room is selling. Something to consider. Something else to consider is if price suddenly collapses and these longs start collapsing, there's a long squeeze in the making. So if price collapses, it'll continue to collapse as these longs come off. Something to watch, not a big concern at the moment. Pretty strong support here at this VPVR level, yearly pivot, 200 EMA. I don't think we get that low in the near term. It's basically at 300. Where price sits between the 50 and the 200 is a bit awkward. It's not strongly supported above the 50. It's pretty far away from the 200. It's obviously exploded since March. It's between both of these yearly pivots. So it's kind of in a no man's land, awkward teenage stage, trying to figure out what it's going to do here. Obviously, higher highs past 450 would be huge for bullish continuation, but then it's got all these other yearly pivots to contend with as far as resistance. But as far as downside support, 300 is great, 220 is great. This isn't revisiting the March low anytime soon, I don't think. Looking at a pitchfork, it's just a trend channel with specific rules. We have 3 anchor points here, and then it draws the rate of change potentially for the trend. You can see we had a nice bounce at the median line a few days ago. So the upside resistance targets are all these diagonals here, and the trend looks intact. It looks fine. Even if it revisits 195, the trend is still intact over a long time frame. If we look at the cloud, similar to the 50 and the 200 EMAs, it's in a bit of an awkward spot because it's in between the TK lines. It's still above the cloud, so it's definitely bullish, but you want the cloud to be thin and rising. If you're really bullish, you do not want the cloud to be thick and flat. Similar to here. Thick and flat spells consolidation, which isn't a surprise if you're just watching the price action. But you want the TK lines to be close to price. You want the TK lines to be close to each other. You want cloud to be thin and rising. So we're not quite as bullish as we could be. Obviously, we're still on the whole bullish, just based on trend. This is really no risk of dropping below 250, for example. Signs that this bullish run would be over would be when price drops below the cloud, which would be 320 or lower, basically. No signs of that yet. And looking at ETH BTC, also a bit of a range mode here. There was this bear div that got put in, and price is trying to erase that bear div. Higher highs in price, lower highs in momentum. Usually when I see RSI revisiting 50, I assume the bear div has run its course if the trend isn't going to continue. 50 is just the median between 0 and 100, obviously, but to me that just says momentum is reset. If price can hold above the 50 and the 200 and the yearly pivot and this VPVR node, I still think the eventual target is 0.5 based on this VPVR level and this yearly pivot. I don't think this revisits 0.2 anytime soon, 0.19. It's definitely less of a straightforward trade than this ETH chart though, USD chart. USD chart should continue to move higher with BTC. The question is, will it move higher faster or slower than BTC, or about the same rate? If it moves about the same rate, this ETH BTC pair will continue to just go sideways, which shouldn't be too surprising because in 2018, 2019, it was a massive, massive range here. Hence all of this VPVR level. So at the end of the day, I'm more bullish on ETH USD than ETH BTC, while at the same time still expecting 0.5 eventually, maybe 12 to 18 months from now. But this is not as bullish as ETH USD is here. So overall, ETH looks great. Transactions are mega expensive, which is terrible for users, terrible for microtransactions, but great for price, because if it's expensive to send, you need to buy more ETH to send ETH and to interact with ETH. And that's just the hard facts about high transaction fees. If they keep going higher, price may keep going higher, but it's a give and take between pricing people out of using the chain, the transactions, and having people buy more ETH to pay for their transactions.